Running a small business often feels like riding a seesaw blindfolded, doesn't it?
Yeah, that's a good way to put it.
1 minute you're up, seeing clear skies and opportunity. The next you're dipping down, facing unexpected headwinds.
Totally.
And right now, the signals flashing for small business owners across the country feel particularly, well, mixed.
It's definitely mixed.
We're looking at recent data that suggests a real uptick in optimism, which is exciting. But it's existing right alongside some deep-seated persistent challenges that just aren't going away.
That tension is exactly what the numbers are showing us. It's not a simple story, where everything is either good or bad.
Right.
Instead, we're seeing this fascinating dynamic between how small business owners feel about the future and the very real pressures they're dealing with today. Understanding that push and pull is key.
Okay, let's really dig into this because today we're doing a deep dive into the latest pulse check on small business sentiment and the conditions they're navigating. Our main source for this dive is the recent May 2025 Small Business Optimism Index from the National Federation of Independent Business, the NFIB.
A really important benchmark.
Exactly. But we're not stopping there. We're also bringing in insights and a crucial real-world perspective from another source that helps ground these big survey numbers in the day-to-day reality of actually running a business.
Yeah, that context is so important. So our mission here is basically to take these different pieces of information and distill them down.
Right.
We want to give you the most important nuggets, the key takeaways, so you can truly grasp what small business owners are experiencing right now.
Understand the drivers behind the optimism and the challenges.
Precisely. And most importantly, see what this broader picture might mean for you and the decisions you're making in your own business.
Okay, let's jump straight into that headline number that got people talking. The NFIB Small Business Optimism Index saw an increase in May 2025, climbing to 98.8.
And to put that 98.8 into perspective, it's actually nudging just slightly above the 51-year historical average for this index, which sits right at 98.
Okay, so above average.
That's barely, but yeah. For a while, sentiment had been lagging below that long-term benchmark, so seeing it push past that line even slightly is, well, it's noteworthy.
And it wasn't just a tiny bump, right? That 98.8 represents a pretty significant 3-point jump just from April.
It does. A 3-point jump is quite solid for this index month over month. So clearly something shifted in a positive direction for many owners as they looked at May.
So what was it? What drove that shift?
Well, the survey really helps pinpoint what drove that positive shift. The biggest contributors to that rise in overall optimism were improved expectations about future business conditions and anticipated sales volumes.
So it's about the future.
It seems a lot of the feel-good factors tied to looking ahead, yeah.
Let's look at the specific numbers for those expectations. According to the NFIB data, the net percentage of owners expecting better business conditions in the future rose dramatically.
It really did.
It shot up 10 points from April, reaching a net 25%. Now, net percent here essentially means the percentage of owners who feel conditions will be better minus the percentage who feel they'll be worse.
Right.
So seeing a positive net 25% is a solid indication of future confidence.
Absolutely. And closely tied to that was the jump in sales expectations. The net percentage of owners expecting higher real sales volumes saw a substantial increase too.
Oh my.
That rose 11 points from April to reach a net 10%.
Wow, 11 points. And the NFIB specifically calls out that this surge in the sales expectation component contributed the most to the overall optimism index improvement.
That's right. That was the single biggest driver.
So if you're wondering why optimism is up, a big part of the answer seems to be that business owners are feeling better about their potential to sell more down the line.
Yeah, looking ahead, they see better sales prospects. You even see a related data point in inventory stocks that kind of ties into the sales outlook.
Okay.
The survey found a net 1% of owners viewed their current inventory as too low.
Only 1%.
Well, that net figure was up 7 points from April. And that marks the highest reading since August 2022. And remarkably, the largest single monthly increase in the survey's history for that specific component.
Wow, largest monthly increase ever. Why is too low inventory significant?
Well, when businesses feel they don't have enough stock, it often signals they anticipate needing more to meet future demand. They're worried about being caught short.
That makes perfect sense, getting ready for that expected sales uptick. However, Here's where that complexity we mentioned comes in.
Right, it's not all rosy.
Despite this clear rise in optimism driven by future expectations, the NFIB data also reveals that uncertainty isn't going away. In fact, the uncertainty index actually rose 2 points from April, hitting 94.
Which raises a fascinating point for anyone running a business, doesn't it? How do you reconcile feeling more optimistic about the future outcome, like expecting higher sales or better conditions, while simultaneously feeling more uncertain about how you'll get there?
Yeah, or what obstacles might pop up.
Exactly. It suggests owners are perhaps hoping for the best, but still very much aware of the, unpredictable nature of the current environment. They might see the potential, but the path forward still feels murky.
It's a really interesting paradox baked into the numbers. Feeling better about where you're heading, but less sure about the road itself.
Well put.
Now, let's transition from future hopes to present-day realities. Because while optimism ticked up, the survey is also incredibly clear about the significant problems small business owners are grappling with right now.
Yeah, this is where the picture gets tougher. According to the NFIB survey, taxes have actually climbed to become the single most important problem for small business owners.
Taxes, number one.
Number one,
Yeah.
18% cited this as their top issue in May.
18%, and that's a 2-point jump just from April. Here's where it gets really notable.
Yeah,
This is the first time taxes have ranked as the number one problem since December 2020.
right. Back then it was tied with labor quality, but now it stands alone at the top.
Why taxes, specifically now?
Well, the source material provides some commentary from an NFIB state director on this. They highlight that a major concern is the lack of predictability in the tax code.
Okay.
They point to state-level inventory tax relief as a positive development in some areas, but they contrast this with the potential expiration of the federal small business deduction.
Ah, the 199A deduction.
Exactly. According to their view, and we're just reporting what the source says here, if Congress doesn't make that deduction permanent, it could significantly increase costs for small business owners.
Right. It's clearly a significant worry highlighted in the survey context. It makes sense why it would jump to the top if there's uncertainty around something so fundamental.
Absolutely.
So taxes are the new number one headache. What follows?
Labor quality is the second most important problem, reported by 16%.
Still very high.
Oh yeah, still a major challenge cited by 1 in 6 owners. But interestingly, it's actually down 3 points from April.
Down 3 points. So maybe slightly less intense?
It suggests the intensity of this specific concern might have slightly eased, even if the problem hasn't disappeared. Maybe overshadowed by taxes right now.
Okay, so labor quality is still a big deal, but maybe taxes are just more of a burning issue right now. And inflation, that's been a constant concern. Where does that rank?
Inflation remains a major concern, cited by 14% of owners. That number is unchanged from April.
Unchanged. So steady pressure.
Exactly. Indicating it's a steady, persistent pressure point that hasn't really let up, sitting firmly as the third most important problem.
And labor costs. That's ever
Yeah.
from quality, right?
Right. Also noted as a significant problem, rising slightly by 1 point in May to 9%.
So while the quality concern might have dipped a bit, the cost of labor continues to be a challenge for owners. Makes sense.
It does.
Let's stay with that labor picture for a moment, because the difficulty in finding qualified workers directly impacts hiring, obviously.
It absolutely does. The NFIB report gives us concrete numbers on job openings. A seasonally adjusted 34% of owners reported having job openings they simply could not fill in May.
34% unfilled jobs.
And that percentage remained unchanged from April, showing this isn't a new or passing issue. It's pretty entrenched.
Wow. Think about that. Over a third of small businesses actively trying to grow or maintain staff, but just unable to find the people they need.
Yeah, and of the owners who were trying to hire, which was 55% of those surveyed, a striking 86% reported finding few or no qualified applicants.
86%.
That figure is really stark. It goes beyond just having an opening. It speaks to the fundamental difficulty in finding candidates with the right skills or experience.
Yeah, it means a huge amount of time and resources wasted on recruitment.
Right. It underscores why labor quality remains such a significant, even if not always the number one problem.
Given those hiring challenges, are owners still planning to try and add staff? Are they still optimistic on that front?
Yes. Cautiously optimistic, maybe. A net 12% of owners plan to create new jobs in the next 3 months.
Okay, 12%.
Now, that's down slightly, 1 point from April, but it still shows that despite the difficulty, a notable percentage of owners have intentions to expand their teams.
And how are they thinking about compensation to attract or keep those workers? Are they planning to raise wages despite the cost pressures?
Well, the data on compensation is interesting. A net 26% reported having raised compensation in May,
Okay.
but that was actually down 7 points from April. So fewer businesses implemented raises last month.
Huh. That seems counterintuitive if labor is still so hard to find. You'd think raises would be going up.
It does seem that way. But look at the forward-looking data. When asked about their plans for the next 3 months, a net 20% plan to raise compensation.
Oh.
And that's up 3 points from April. So it appears fewer owners were able to or chose to raise wages in May, but more are planning to do so in the near future.
So maybe that aligns with those rising expectations for sales and conditions. They're planning raises for when things hopefully pick up.
That could be it. Similar to sales expectations, there seems to be more optimism or intention regarding future compensation compared to recent actions.
Interesting. What about investing in the business itself, things like equipment or buildings? Capital outlays are a big indicator of confidence and growth strategy, right?
They are a huge indicator. The NFIB survey asks about planned capital outlays. 22% of owners plan capital outlays in the next 6 months.
22%. How does that compare?
That's up 4 points from April, and notably, it's the highest reading of this entire year.
Highest reading for planned spending this year.
Mhm.
Okay, that definitely signals confidence looking ahead. What about spending they've actually done recently?
Here's another one of those points of contrast. 56% reported making capital outlays in the last 6 months.
Okay, 56% recently spent.
But that was down 2 points from April and is actually the lowest reading of this year for recent spending.
Wow, okay, hold on. Highest planned spending for the year coming up, but lowest actual spending for the year just happened.
Exactly. It's a powerful contrast. Planning to spend the most this year in the next 6 months, but having spent the least this year in the last 6 months.
What does that tell us? A big pause.
It really highlights that strategic pause many businesses might be taking. They might be delaying non-essential or larger expenditures right now due to current uncertainties or maybe cash flow pressures.
Right.
But they're holding on to the plan to invest once they anticipate conditions improving, perhaps aligning with those higher sales expectations we talked about.
It's cautious optimism translated into delayed action.
Perfectly put. It's like, we want to spend, we plan to spend, just not quite yet.
Okay. That insight is key. They're holding their powder, ready to invest when they feel the time is right. And for those who did spend in the last 6 months, what did they focus on?
The breakdown from the survey shows where that spending went. 40% on new equipment, 26% on vehicles.
Okay, big chunks there.
Yeah. Then 15% on facilities, 10% on fixtures, furniture, and 5% on new buildings or land.
So the focus is heavily on updating or expanding physical assets needed for operations, particularly equipment and transportation.
Seems that way, yeah. Keeping the engines running or upgrading them.
Let's turn to the direct results, sales and profits.
Yeah.
The bottom line, what do the recent numbers show there? Because expectations are one thing.
Right. Reality can be different. Looking at recent sales performance, the picture isn't as bright as the future expectations. A net negative 13% of owners reported higher nominal sales in the past 3 months.
Net negative 13%, meaning more reported lower sales than higher sales.
Correct. And that figure was down 5 points from April.
Down 5 points.
Yeah.
So an even smaller percentage of businesses saw their sales increase recently compared to the month before.
Yep.
Okay, that explains why poor sales remained the top problem for 9% of owners for the 5th consecutive month.
Exactly. Despite optimism about selling more later, current sales volume is a clear struggle for a significant portion of small businesses right now.
And this directly impacts profits, I assume.
It does. The frequency of positive profit trends was a net negative 26% in May.
Oof, negative 26%.
And that was 5 points worse than in April.
Worse profit trends.
Mm-hmm.
So recent sales are dipping for many, and profits are following suit, even more so. What did owners cite as the reasons for these profit trends, did the survey ask?
It did. Among owners reporting lower profits, the top reasons were sales blamed by 36%,
Makes sense.
and the rising cost of materials, cited by 13%.
Okay, costs again.
Yep. And for the smaller group reporting higher profits, sales volumes were the primary driver, credited by 52%.
So it really underscores that sales performance is the biggest swing factor, but rising costs are also seriously eating away at margins for many.
Absolutely. It's a two-pronged crusher for a lot of businesses.
And how does financing fit into this picture? With interest rates still being a major economic topic, is that showing up as a top problem?
It's showing up more. Financing and interest rates were cited as a top problem by 5% of owners.
Only 5%?
Still a smaller percentage than taxes or labor, yes, but it's up 2 points from April, indicating it's becoming a more notable concern for some businesses.
Okay, growing concern. Are businesses still needing to borrow? Or are they pulling back?
25% reported borrowing regularly, which is down just 1 point from April, so still a quarter borrowing regularly.
And is it getting harder to get those loans?
Slightly less so, maybe. When asked about their most recent loan experience, a net 4% reported their last loan was harder to get than previous ones. That was also down 1 point.
Okay, so maybe slightly easier access, or perhaps fewer needing to borrow overall.
Perhaps, but the cost is still increasing for many. A net 7% reported paying a higher rate on their most recent loan. And that's up 1 point from April. So getting the money might be marginally less difficult for some, but paying it back costs more.
Right, another squeeze. Okay, this data paints such a complex, almost contradictory picture, doesn't it? High hopes for the future, but struggles with current sales and profits. Top problems being taxes and labor, but also rising costs chipping away.
It really is multifaceted.
Data gives us the broad strokes, the percentages, but sometimes a real-world story brings those numbers into sharp focus.
Yeah, absolutely. And this is where the insights from our second source come in, specifically an interview with a business owner named Krissa.
Krissa, okay.
She runs a family-owned property preservation company, and her experience offers a ground-level look at navigating this exact economic climate we're seeing in the NFIB data.
Property preservation, what kind of work does that involve exactly?
It's essentially maintaining and inspecting properties, often those that are vacant, bank-owned, or in some state of distress. Think securing the property, doing necessary repairs, landscaping, interior checks, that kind of thing.
Got it. Okay, so how does her story connect to the data points we just discussed, like the rising costs?
It connects directly to those rising costs we saw cited as a reason for lower profits. Krissa explicitly mentioned facing significant increases in supply costs.
Did she give specifics?
She gave a really concrete example. Some materials she needed for her work jumped by as much as 158%.
Wow. 158%. Imagine trying to manage a budget or, quote, jobs with those kinds of price shocks.
Exactly. It makes planning incredibly difficult.
So how is she able to keep her business afloat, let alone busy, with costs like that hitting her?
Well, despite those challenges, she said, and I'm quoting her here, we have actually been staying busy. Very busy.
Very busy. Amidst rising costs, labor issues, and these negative sales trends for many other businesses, how? What's her secret?
Her explanation really highlights finding opportunity within the broader economic shifts. Her niche property maintenance and inspections is actually in high demand when the housing market is under stress. Particularly with rising foreclosure risks, her company has contracts with banks to handle the upkeep and inspections of these distressed properties.
That's a powerful point. So while some businesses might be hit hard by a downturn or specific market pressures, her specific services are needed because of those pressures.
Precisely. She's found a crucial niche where demand actually increases when the overall housing market is struggling or facing uncertainty. It's counter-cyclical in a way.
That's fascinating. It's a great example of how a business can adapt and find a pocket of demand, even when the overall economic signals are mixed or challenging.
Exactly. It really illustrates that resilience and strategic positioning are key. It's not just about the overall tide, but where your boat is positioned.
Before we pull it all together, were there any other problems that registered significantly in the NFIB survey, even if they weren't top 3? Anything else popping up?
Yes, a couple of others worth mentioning. Government regulations and red tape were cited by 9% of owners.
Okay, always a factor.
And competition from large businesses was mentioned by 4%. Interestingly, that competition figure was actually down 3 points from April.
Down, so less worried about big competitors this month.
Apparently so, suggesting that specific concern might have lessened slightly compared to other pressures like taxes or costs this particular month.
Okay, so let's bring this deep dive to a close. Let's try and summarize. What are the absolute key takeaways from this stack of sources, this mixed bag?
Well, I think the main message is that small business sentiment saw a notable increase in May. That's the headline. But it's largely fueled by a significant jump in optimism regarding future sales volumes and anticipated better business conditions.
Right, future-focused. And planned capital investment also saw a rise, highest this year.
Correct. But that forward-looking optimism exists in a complex environment where current realities are still tough for many.
Yeah. Taxes have surged to become the single most important problem. Labor quality and inflation remain high on the list of concerns.
And recent trends in actual sales and profits have actually been negative for more businesses than not.
And Chris's story provides that vital real-world perspective, showing how even in this mixed environment, with significant challenges like skyrocketing material costs, businesses with the right niche and strategy can not only survive, but actually thrive by meeting specific demands created by the broader economic conditions.
It's a testament to adaptability.
So, what does all this data and these insights mean for you listening right now? Understanding these trends gives you a crucial benchmark, doesn't it?
It really does.
You can compare your own experiences with taxes, labor, costs, and sales expectations against what thousands of businesses across the country are reporting. It can help you anticipate potential shifts, maybe identify areas where others are feeling pressure or finding opportunity that you can learn from.
And maybe this raises an important question for you to consider as you look ahead. Given that small business owners are planning more capital investment and anticipating better sales, despite reporting these negative trends in recent sales and profits.
Right, that disconnect.
What does this fascinating blend of forward-looking optimism and current difficulty mean for how you approach planning and decision-making for the rest of the year? How do you balance that hope with the current reality?
Or, thinking about that top concern, how might the increased focus on taxes and the potential for changes at the federal level with things like the small business deduction, how might that specifically impact your business's financial strategy and outlook?
Definitely something to keep top of mind, something to reflect on as you navigate your own path through these, shall we say, interesting times.
Interesting times indeed.